There is a sentence, 7 words that the banking industry does not want you to say, that the property tax office does not want you to say, that your Medicare prescription plan, your utility company, your state revenue department, and 2 other institutions collecting money from you every single month are counting on you never saying the sentence is, I'm over 65. What am I exempt from? That is it, 7 words. And the reason those 7 words cost the average American senior between $3,400 and $9,200 per year in fees. They were never legally required to pay is not because the exemptions are hidden in some obscure regulatory footnote. The exemptions are not hidden. They are published. They are codified. In several cases, they are printed in the same document that authorized the fee. The industries collecting these fees are not confused about whether you qualify. They know. They have known for years. They have compliance departments that track exemption eligibility. They have internal policies that authorize waiver authority for qualifying customers. The information exists inside those organizations right now today, fully documented and ready to apply the moment you ask. They are counting on you not asking. And the reason I am choosing to spend the next 30 minutes walking through exactly what to say to whom and at which institution, rather than covering literally any other topic I could cover today, is personal. My father-in-law spent 8 years paying a property tax bill in Hamilton County, Ohio, that was $300 per year higher than it needed to be. He qualified for the senior homestead exemption from the first year he was eligible. The county sent him his assessment every year. Never once did that assessment include a sentence that said, Mr. Kowalski, you may be entitled to a reduction. So he found out 2 months before he died in a conversation with a neighbor at a church picnic who happened to mention it. 2 months? 8 years? $24,800 that he paid to Hamilton County, Ohio, that the law never required him to pay. I'm not going to let that happen to you. Before I walk through all 7, hit the like button right now. Not when the video ends. Now, because the financial services industry, the utility industry, and the property tax collection system all benefit from this information staying invisible. And the algorithm in 2026 routinely suppresses personal finance content that creates direct consumer awareness of institutional fee practices. Every like on this video is a signal. Every share is one more senior who learns the 7 words before the next billing cycle. Subscribe and press the bell. This archive exists for the people the system counts on to stay quiet. And the standard disclaimer, this video is educational, not legal or financial advice. The specific exemption. Why institutions don't tell you about exemptions, rules, income thresholds, and application procedures vary by state, institution, and individual circumstances. Verify every item on this list with your specific provider or qualified advisor. But verify because the alternative is continuing to pay for something you were never legally required to buy. Now, 7 fees, 7 exemptions, 7 conversations you need to have before this month's statements arrive. Fee number 1. The property tax you are almost certainly overpaying. This is the largest fee on the list and the one with the highest probability of applying to you right now today. Regardless of your income level, regardless of your home value, regardless of what state you live in, 49 of the 50 states in the United States offer some form of senior property tax exemption, reduction, freeze, or circuit breaker program. The specific name varies, the mechanics vary, the income threshold varies, but the core principle is consistent across nearly every jurisdiction. Can I enjoy it? If you are 65 or older and you own and occupy your primary residence, your state or county has a legal mechanism to reduce or freeze your property tax assessment. The average annual savings for seniors who claim their state's primary property tax exemption is between $1,200 and $40,800 per year, depending on the state and the assessed value of the home. In high property tax states like Illinois, New Jersey, New York, and Connecticut, that number climbs higher. In Illinois, the senior homestead exemption plus the senior assessment freeze can reduce a property tax bill by $3,000 to $7,000 annually for a qualifying homeowner in Cook County. Here's the crime. The application for this exemption is not automatic. In most states, you apply once at your county assessor's or auditor's office. You submit proof of age and proof of primary residence. In income-tested programs, you submit the first page of your most recent federal tax return. The application is typically 2 pages. The processing time is typically 30 to 90 days. And once granted, the exemption typically renews automatically, or with a simple annual confirmation form. The county assessor knows who is over 65. They have access to birth date information. They know which homeowners in their jurisdiction qualify for the exemption and are not currently receiving it. They do not send those homeowners a letter. They do not include a notice with the annual tax bill. They collect the full assessment and wait. Go to your county auditor's or assessor's website right now after this video. Search Senior Exemption or Homestead Exemption or Senior Freeze. Download the form. Fill it out. If you have been paying full property taxes, fee number 1, property tax senior exemption, past age 65 and never applied. Most states allow you to retroactively claim 2 to 3 years of overpayment. My father-in-law was not eligible for retroactive recovery. He found out too late. You're not too late right now. Fee number 2, the Medicare Savings Program gap. This one applies to a specific income range that is broader than most people expect and narrower than most qualifying seniors realize they fall into. The Medicare Savings Programs, specifically the Qualified Medicare Beneficiary Program, the Specified Low-Income Medicare Beneficiary Program, and the Qualifying Individual Program, are federal programs that eliminate or dramatically reduce Medicare Part B premiums, Part A premiums if applicable, and in some cases Part D co-payments for seniors whose income falls below specific thresholds. In 2026, the QMBBB income limit for a single person is approximately $155 per month in most states, or $74 per month for a couple. The SLMBBB limit is approximately $1,478 per month for a single person. These are monthly income thresholds, not annual, and critically, the income counted as countable income under Medicaid rules, which excludes certain types of income, including some Social Security income adjustments, veterans benefits in many states, and irregular income. A senior with a gross annual income of $18,000 may have countable income under Medicaid rules of $1,400 to $400 or less. Their monthly countable income $200. They qualify for QMB. Their Part B premium eliminated. Annual savings $220. They're almost certainly not enrolled. The enrollment rate for Medicare savings programs among qualifying seniors is estimated at below 40% nationally. The primary reason, nobody told them they qualified. The Social Security Administration, which handles enrollment, does not proactively identify qualifying individuals and initiate enrollment. The state Medicaid agencies, which administer the programs, do not cross-reference Medicare enrollment data against income eligibility at the individual level to trigger outreach. The system is passive. The senior must apply, and the average senior does not know to apply because the Medicare welcome kit they received at 65 mentioned in the program in 2 sentences on page 47. Call your state health insurance assistance program SHIP for a free eligibility screening. The number is different in every state, and it is in the description below this video. The call takes 20 minutes. The annual savings, if you qualify, can exceed $2,000. Zero cost to apply. Zero reason to wait. Fee number 3. The prescription drug cap of the pharmacy isn't tracking for you. The Inflation Reduction Act of 2022 created a $2,000 out-of-pocket cap on Medicare Part D prescription drug costs beginning in 2025. In 2026, this cap is fully in effect. Here's what that means in plain English. Once you have spent $2,000 in a calendar year on covered Part D drugs, counting your deductible, your co-payments, and your coins insurance, your cost for covered prescription drugs for the rest of that calendar year is zero. Zero. Not reduced, not discounted. Zero. Here's the problem. The pharmacy point of sale system does not always correctly apply the cap in real time. Billing errors, plan coordination delays, and data synchronization lags between the drug plan and the pharmacy mean that some seniors reach the $2,000 threshold and continue being charged co-payments that they legally owe nothing for. And more commonly, seniors who are close to the $2,000 threshold in November and December do not know they have nearly reached it and make decisions about which medications to fill and which to delay. Pay based on cost, without knowing that the next dollar they spend will be their last required dollar of the year. The fix is simple. Call your Part D plan's member services number in September or October and ask, what is my current year-to-date out-of-pocket total toward my annual cap? If the answer is close to $2,000, fill everything you need before December 31st. If the answer is over $2,000 and you have still been charged co-payments, you are owed a refund and you need to file a coverage determination request immediately. The plan will not call you proactively to tell you that you have reached the cap. The plan will not flag your account to alert the pharmacy. You have to track it yourself and ask the question fee. Number 4. The state income tax. Your retirement check should not be paying. 41 states do not tax Social Security income at all. 9 states currently impose some level of state income tax on Social Security benefits. But here's the fee that even the residents of those 9 states are frequently overpaying. Every state that fee number 2 Medicare Savings Program gap taxes Social Security has an exemption threshold, a partial exclusion, an age-based deduction, or an income phase-out that significantly reduces or eliminates the tax. For the majority of middle and home retirees, the full taxation of Social Security at the state level is almost never the actual rule. It is the worst-case interpretation of the rule beyond on Social Security. 27 states offer full or partial exemptions on pension income, retirement account distributions, or both. The specific exclusions vary dramatically. In Georgia, the first $65,000 of retirement income for a single filer over 65 is excluded from state income tax. In Kentucky, the first $310, $110 of retirement income is excluded. In Mississippi, all qualified retirement income is excluded entirely. These exclusions are claimed on your state income tax return. They require specific form entries or schedules. They are not applied automatically. A tax preparer who is not familiar with senior-specific state exclusions will miss them. A tax software program that is not updated with the current year's exclusion amounts will miss them. And a senior who prepares their own return without knowing the exclusion exists will miss it entirely. This is the fee that most embarrasses me about the financial planning industry. This information is not complex. It is not obscure. It is published by every state revenue department in their annual individual income tax instructions. The exclusion amounts are right there on the form, and seniors are overpaying state income taxes on retirement income that the state legislature specifically voted to exempt because nobody sat down with them and read page 3 of the state return instructions. Find your state's Department of Revenue website. Search retirement income exclusion or pension income exclusion. If your state offers one, compare the exclusion amount against your reported retirement income on last year's return. If the exclusion was not claimed, file an amended return. In most states, you can amend returns going back 3 years. Fee number 5, the utility bill reduction. Nobody applies for the Low-Income Home Energy Assistance Program. LIHE is a federally funded program that assists low and moderate income households with heating and cooling costs. The income eligibility threshold is 150% of the federal poverty level or 60% of state median income, whichever is higher. For a single-person household in 2026, 150% of the federal poverty level is approximately $22,590. 60% of state median income in most states is significantly higher than that. A single senior with an annual income of $28,000 to $36,000 may qualify in their state, depending on which threshold applies. LIHP benefit amounts vary by state. Annual benefits range from $300 to $1,500 in most states. Some states offer both heating and cooling assistance as separate benefits, but LIHAP is only the federal baseline. Every major utility company in the United States operates its own low-income senior rate program or senior discount program. These programs are governed by state public utility commission rules and are frequently not advertised to existing customers. The income thresholds for utility company senior discount programs are often higher than LIHE, and in some states apply automatically to any customer over 65 who requests the rate review. Call your gas and electric utility company. Ask specifically, do you have a senior rate, a low-income discount program, or a budget billing option for customers over 65? If yes, ask what documentation you need to apply. The annual savings across heating, cooling, and electricity can range from $40 to $1,800, depending on your climate zone, home size, and current rate category. This phone call takes 12 minutes. The savings are recurring annually. The information will not appear on your bill. It will not appear in your annual rate increase notice. It will not appear anywhere unless you call and ask the 7 words. Fee number 6, the bank fee that disappears when you ask. Monthly maintenance fees at major American banks range from $4.95 to $25 per month for standard checking accounts. Annual cost $59 to $300 for a senior on a fixed income who has held the same account at the same bank for 20 or 30 years. This is money leaving the account every month that the bank has zero legal right to keep if the customer invokes the correct account type. Every major American bank, Chase, Bank of America, Wells Fargo, U.S. Bank, Citibank offers a senior-specific or senior-eligible account tier that either eliminates the monthly maintenance fee entirely or significantly reduces it. The fee number 3, the $2,000 prescription drug cap eligibility threshold is typically age 62 or 65, depending on the institution. The application process is a phone call or an in-branch conversation. These accounts are not advertised at the branch level because branch staff is incentivized on new account openings, not on account type migrations. The senior who walks into the branch and does not ask will never be told the fee-free option exists. The senior who has been a customer for 30 years and calls the 1-800 number with a complaint about a fee has a 90% probability of having that fee waived indefinitely if they ask for the senior account review. Additionally, credit card annual fees, and which range from $95 to $695 for premium travel cards, are subject to retention waiver authority at every major issuer. If you have held a credit card for more than 2 years, have a clean payment history, and call to cancel citing the annual fee, the retention department has authorization to waive the annual fee, offer a statement credit equal to the annual fee, or downgrade you to a no-fee version of the card without closing the account. The issuers do not publish this. Retention waiver authority is internal policy, not consumer disclosure. The call script is 4 sentences. Call the number on the back of the card. Say, "I'm considering closing this account because of the annual fee. I have been a customer for X years. Is there anything you can do to waive the fee or reduce it? Then stop talking and wait." Fee number 7, the notary. Fee that is illegal to charge you in more states than you know. This one surprises people every time. Notary fees range from $5 to $25 per signature at private notary services for estate planning documents, powers of attorney, health care directives, and real estate transactions. The documents that seniors need notarized most frequently. The cumulative notary cost over a single planning session can reach $75 to $200. In 22 states, banks are required by state law or by their own operating charters to provide free notary services to account holders. You are an account holder. You have been an account holder at the same bank for decades. Every time you paid a notary service to notarize a document that your bank was required to notarize for free, you paid a fee the law never authorized. Beyond banks, county recorders, offices, and most states provide free notary services during business hours for documents that will be recorded with the county, deeds, liens, property transfers. Many public libraries offer free notary services for patrons. Many senior centers provide free notary access on scheduled days. The Social Security Administration field offices will notarize certain documents for benefit-related purposes at no charge. The entire private notary fee economy for seniors exists because most seniors do not know that free alternatives exist within walking or driving distance of virtually every home in America. Call your bank's branch. Ask, "Do you provide free notary services for account holders?" If yes, schedule your next document signing there. If no, call the county recorder's office and ask about walk-in notary availability. Then call the nearest public library, the sentence that collects all 7. Now, I want you to put these 7 conversations together into a single action sequence. Write down the name of your county. Write down the name of your bank. Write down the name of your Medicare Part D plan. Write down the name of your gas and electric utility. Write down the state you file taxes in, and write down the name of every credit card you currently pay an annual fee on. That list represents the 7 institutions that may be collecting fees from you right now that they are not legally entitled to collect from a person who is over 65, who qualifies for an exemption, and who knows to ask the 7 words, "I am over 65. What am I exempt from?" Say those words to your county assessor's office and ask about the senior homestead exemption. Say them to your Medicare ship counselor and ask about Medicare savings programs. Say them to your Part D plan and ask about your year to 8 out-of-pocket total. Say them to your state tax authority and ask about retirement income exclusions. Say them to your utility company and ask about senior or low-income rate programs. Say them to your bank and ask about senior account tiers and fee waivers. Say them to your credit card issuer and ask for a retention review of the annual fee. None of these calls requires an attorney. None of them requires a financial advisor. None of them requires anything except a phone and the willingness to ask a question that the institution receiving the call already knows the answer to. Here is my honest reaction to all of this, and I say it because I think it needs to be said directly. These are not edge cases. These are not obscure programs for exceptional circumstances. These are mainstream financial exemptions that apply to tens of millions of seniors right now, today, in every zip code in fee number 4, state tax on retirement income this country. The combined annual value of these 7 exemptions for the average qualifying senior is between $3,400 and $9,200 per year. That is not a rounding error. That is a car payment. That is a vacation. That is the difference between a retirement that feels comfortable and a retirement that feels pinched. And the institutions collecting the fees know this. They have the actuarial data, they know the exemption utilization rates, they know that for every senior who calls and asks, there are 9 who do not. The passive revenue from the 9 is substantial and recurring and essentially permanent because the 9 will keep paying until the day they die and never once know they did not have to. Share this video with one senior, a parent, a neighbor, a friend from church, the person you see every week at the grocery store who is paying bills on a fixed income and has never once asked their bank, their county, their Medicare plan, or their utility company what they are exempt from. One person today because the 7 words are free to say, and the institutions are open right now, and the billing cycle does not wait for anyone who is almost going to make the call next. There is a sentence, 7 words, that the banking industry does not want you to say, that the property tax office does not want you to say, that your Medicare prescription plan, your utility company, your state revenue department, and 2 other institutions collecting money from you every single month are counting on you, never saying the sentence is, I'm over 65. What am I exempt from? That is it. 7 words. And the reason those 7 words cost the average American senior between $3,400.